powered by data. Electricity.
At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met. From permits to paychecks. Ensuring legal, fair, and quota-compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
SRO. SRO, so you have a range clear launch.
And CDI. Half of the case, see processing and launch.
Good afternoon, investors. You are now on KleverStock with me, Dini, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front, Bursa Malaysia opened on a mildly positive footing this Thursday morning, successfully clawing back ground from yesterday's intense profit-taking session. Investor sentiment received a strong boost after fresh US economic data successfully calmed international inflation anxieties, spiking an overnight tech and AI-driven rally on Wall Street. Spurred by this returning global optimism, the benchmark FBM KLCI advanced by 3.97 points to trade at 1,717.23 at 9:07 a.m. as institutional capital began flowing right back into domestic blue chips. Market experts at Apex Securities indicate that while the benchmark index could print modest gains from the near term, supported by resilient oil, link, and traditional defensive counters, overall upside is likely to remain narrow and strictly rotation-driven. The research firm believes broad-based market move will likely hold back until regional technology sentiment stabilizes and geopolitical friction in the Middle East shows signs of clear resolution. Consequently, chartists advise staying cautiously positive while strictly avoiding chasing extended rallies, especially given the thick cluster of corporate banking and tech earnings results dropping throughout the week. On a sectoral basis, Apex maintains a highly bullish structural outlook on local technology and plantation counters, noting that plantation players are benefiting beautifully from strong crude palm oil pricing and macro defensive positioning. Conversely, they warn that industrial products and utilities may face persistent near-term headwinds following recent profit-taking, while energy counters could experience soft trading conditions despite international Brent crude benchmarks holding firmly elevated around $85 a barrel. Looking at individual corporate movers at the open, state-backed heavyweight Petronas Chemicals led the morning charge, rising 8 cents to sit at 4 ringgit and 66 cents. Logistics giant MISC picked up 7 cents to reach 8 ringgit and 9 cents, while plantation major SD Guthrie advanced 6 cents to trade at 6 ringgit and 68 cents. Over on the active volume tables, penny stock favorite Tanco continued to command massive retail investor interest, ticking up 1 cent to trade at 32.5 cents. Wrapping up the active list, tech component manufacturer NationGate gained 3 cents to touch a flat 1 ringgit, while HHRG dipped 0.5 cents to open at 16 cents. Moving on to our local currency and foreign exchange. The Malaysian ringgit successfully extended its upward rally against the US dollar at the opening bell this Thursday morning, catching a powerful tailwind from weaker than expected economic data out of Washington that continues to heavily depress the greenback. At 8 a.m., the local currency strengthened to trade at 4.0655 to 4.0710 against the American dollar, printing a solid advance from Wednesday's official market close of 4.0760 to 4.0805. Bank Muamalat Malaysia Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid highlighted that the US dollar index or DXY tumbled 0.43% to sit at 100.485 points. This sudden slide occurred after the US Producer Price Index or PPI unexpectedly contracted by 0.3% month-on-month for June, completely defying broader market consensus which had anticipated absolutely no change. The unexpected producer price cooling was heavily driven by falling global energy costs following the strategic implementation of a ceasefire agreement between the United States and Iran. Adding to the dollar's downward pressure, Federal Reserve Chairman Kevin Warsh's recent testimony before the Senate Banking Committee strongly indicated that the central bank is in no immediate hurry to aggressively raise interest rates in the near term. Dr. Afzal Nizam noted that because both the benchmark consumer and producer price indices inside the United States have distinctly eased on the back of lower international oil prices, emerging market currencies, including the ringgit, will enjoy a solid window of regional support. The chief economist expects the local note to trade comfortably within a firm band between 4.06 to 4.08 against the greenback throughout today's session. Shifting over to the wider international tables, the ringgit opened on a highly mixed note against a basket of major global currencies. The local note rose against the Japanese yen to trade at 2.5083 to 2.5119 from yesterday's close of 2.5103 to 2.5132, but weakened against the British pound to open at 5.5039 to 5.5113 and slipped vis-a-vis the euro to sit at 4.6631 to 4.6694. On the regional front, the ringgit advanced confidently against most of its Asian peers, edging up against the Indonesian rupiah to to 225.4, strengthening against the Philippine peso to 6.59 to 6.60 and appreciating versus the Thai baht to sit at 12.1055 to 12.1280. However, it experienced a marginal fractional ease against the Singapore dollar, trading at 3.1552 to 3.16. Now for some economic news. Malaysia's broader fiscal consolidation efforts are facing a temporary widening pressure. In a fresh economic briefing issued at the Institute of Chartered Accountants in England and Wales virtual forum today, Hong Leong Investment Bank research revealed that it projects Malaysia's national fiscal deficit to widen slightly to 3.6% of gross domestic product this year. The adjusted outlook comes as a sharp sudden explosion in global fuel subsidy spending successfully offsets the government's aggressive fiscal consolidation path. Hong Leong Investment Bank Chief Economist Felicia Ling explained that the 3.6% projection carefully factors in the nation's current subsidy financing framework, a highly stable sovereign bond issuance pipeline, and a welcome absence of extraordinary fiscal distress measures. However, Ling highlighted that fixed income and foreign exchange investors have raised substantial structural concerns regarding Malaysia's strict ability to meet its primary fiscal consolidation targets. These worries spiked immediately after the federal government decided to maintain the retail ceiling price of highly popular RON95 Petron at a heavily subsidized RM1.99 per litre. Ling explicitly warned that the specific fiscal cushion is being microanalyzed by top international credit rating agencies, including Moody's Rating, S&P Ratings, and Fitch Ratings. Any significant unmanaged deviation from the state's public fiscal target could easily heighten the baseline risk of a sovereign credit rating downgrade, which would create immediate, painful downward pressure on the ringgit. Looking at the underlying data, the extreme cost of the domestic energy shield becomes highly apparent. During January and February, the government's monthly subsidy expenditure sat at a very manageable 800 million ringgit. However, following the reignition of the recent Middle East conflict, monthly outlays ballooned to a massive 4.7 billion ringgit in March, followed by a staggering 4.9 billion ringgit in April. In the first 5 months in this year alone, the federal government burned through approximately 15 billion ringgit on subsidies, burning up what was originally meant to be the entire subsidy allocation for all of 2026. To counteract the global supply shock, Prime Minister Datuk Seri Anwar Ibrahim officially informed Parliament that the government has aggressively increased the total annual subsidy allocation up to a towering 40 billion ringgit. This massive intervention includes an emergency injection of 25 billion ringgit specifically to lock down the RON95 price at RM1.99 per litre. Analysts point out that this extra 25 billion ringgit lifeline is equivalent to roughly 1.2% of national GDP. Ling concluded that while pure mathematical theories suggest adding 1.2% of GDP to the original 3.5% target could cause the national deficit to blow out to a highly dangerous 4.7% of GDP, the research house firmly does not expect that worst-case scenario to happen, as robust domestic economic growth and strong alternative revenue streams keep the target within a safe, narrow 3.6% boundary. We will now take a short break, but don't go away. We will return shortly with corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. Integrated builder, developer and furniture manufacturer Tafi Industries Berhad has successfully locked down a major construction breakthrough in Selangor. In a regulatory filing with the local boards, the group announced that it wholly owned subsidiary Tafi Home and Office SDN BHD has officially accepted a comprehensive letter of award from Armani KPF2 Development SDN BHD. The massive contract, valued at a firm 135 million ringgit, tasked the group with executing the primary structural and architectural works for a towering 37-story mixed-use commercial strata development located in Setia Alam, Shah Alam. Because of the underlying corporate ownership, the contract is officially classified as a recurrent related party transaction. Armani KPF2 Development is heavily owned by Tafi Industries' own board members, specifically Datuk Seri Azlan bin Azmi holding a 20.1% stake, Datuk Seri Wong Zi Chin with 39.9%, and Datuk Seri Ong Chi Kien at 10%. While the remaining 30% balance is held by substantial corporate shareholder Koperasi Generasi Felda Baru Berhad. Under the terms of the commercial agreement, Tafi will be entirely responsible for provisioning the full suite of labor, raw materials, tools, heavy equipment, and machinery required to construct the single-block master project. The extensive development features an impressive configuration comprising 498 high-end service apartments, 500 small home office units, 17 shop offices, 352 active commercial spaces, and a massive 8-story parking podium alongside dedicated community amenities. The entire construction timeline is slated for a 42-month duration, with heavy machinery officially planned to break ground on site starting July 21, 2026. This contract injection provides deep multi-year earnings visibility for the group, matching perfectly with their latest strong operational momentum. For the 9-month period ended March 31, 2026, Tafi reported a stellar net profit of 24.38 million ringgit on a robust top-line revenue of 258.01 million ringgit following its strategic financial year-end change to June 30. Core construction services stood tall as the primary financial driver for the organization, contributing a dominant 73.8% for all total group revenue, followed by property development at 18.9% and furniture manufacturing bridging the remaining 7.3%. On the trading floor, Tafi Industries equity closed completely unchanged at a flat 60 cents per share, maintaining its solid market capitalization value at 227.7 million ringgit. Up next, we have a market update. Sabah-based beverage manufacturer Lifewater Berhad is executing an aggressive diversification strategy to evolve into a full-scale, fast-moving consumer goods powerhouse. In a regulatory announcement to the local boards, the group revealed a proposed acquisition of a dominant 90% equity stake in the Hung Thai Group for a total purchase consideration of 46.8 million ringgit. The target consists of 3 established Sabah-based food manufacturing, wholesale and distribution entities, giving Lifewater immediate ownership over high-demand consumer portfolios, including rice, noodles, sauces, and condiments. Equity analysts at CIMB Securities are highly optimistic about the transaction, maintaining a firm buy rating on Lifewater with an unchanged target price of RM1.77. The house forecasts that the value-accretive deal will significantly boost the group's earnings per share by 10.3% for the financial year 2027 and 10.2% for the financial year 2028. Chartists note that the acquisition represents an excellent strategic move that completely bypasses the execution uncertainties of building a food value chain from scratch. CIMB Securities further highlights that the expanded group is primed to unlock immediate, highly meaningful cross-selling and logistical distribution synergies. by aggressively leveraging its existing fleet of more than 90 commercial delivery trucks and an extensive network of over 5,000 retail touchpoints across East Malaysia, LifeWater is uniquely positioned to scale Hung Thai's product reach far more rapidly. Simultaneously, LifeWater will tap directly into Hung Thai's deep food manufacturing infrastructure and 30-year operational heritage to entrench its brand presence across Sabah. To ensure complete operational and administrative continuity post-acquisition, the original corporate vendors will retain the remaining 10% minority stake and have structurally agreed to continue managing Hung Thai's core business operations for a minimum of 5 years. Backed by a healthy balance sheet holding a net cash position of 9.4 million ringgit, LifeWater plans to fund the 46.8 million ringgit cash outlay through a balanced mix of commercial bank borrowings and internal cash reserve. The macro expansion is on track for final legal completion by the second quarter of 2027. Finally, wrapping up, we have major corporate developments and deals across Malaysia. Gamuda BHD said its 50-50 joint venture Khazanah Air Perak SDN BHD has signed a 40-year bulk treated water supply agreement with Perbadanan Bekalan Air Pulau Pinang SDN BHD under the Northern Perak Water Supply Scheme. Simdabi Property BHD and SD Guthrie BHD have formalized the injection of 1,021.9 acres of land in Bukit Kerayong Estate Kappa into their 50-50 joint venture of 793.3 million ringgit. Sunway BHD said its Singapore unit Sunway MCL Ltd is part of the consortium that submitted the highest bid of 2.1 billion Singapore dollar for the Bayshore Drive government land sale site in Singapore. DRB Highcom BHD is evaluating the establishment of a vehicle assembly plant in Algeria as part of its strategy to expand into the North African automotive market. EG Industries BHD said its subsidiary Genetronic Malaysia SDN BHD has signed a letter of intent with a US-based customer for the manufacture and supply of advanced networking switches using co-packaged optics technology valued at $100 million. GDB Holdings BHD said the Shah Alam High Court has ordered the winding up of Damai City SDN BHD, the developer of the 8 Conlay project. Jati Tinggi Group BHD has secured 2 data center related contracts in Johor with a combined value of 22.6 million ringgit. That's a wrap for Midday Roundup with me on KleverStock. Thank you for choosing us investors. Stay tuned for our upcoming live stream programs.